but a very special guest, Rakesh Biyani, the director at Future Group. He joins us in the show right now. Rakesh, such a pleasure having you today on the show. And you know, Future Group stocks, they've seen such a phenomenal rally this year. FRL stock has grown about what, 326%. FCL is up about 223%. You've got FLF, which is shot up about 181%. What's changed really post GST? Update us on what the inventory levels are post GST and whether or not you've undertaken any sort of pricing strategy.
So it's early days of GST, and I think the full impact of GST will take at least about another 12 months or so. But I would say that there are a lot of products where the prices have come down, and these have already been passed on to the customers. But the big play that we need to do is in terms of bringing in efficiencies. There are in the past there were these state borders which did not allow us to without loss of tax we were not allowed to move goods, and thus we would maybe have extra inventories at different places, or at times we would have curtailed our certain assortment in certain markets. But now that has gone, and now that there is a seamless flow of goods which is permitted, what we want to do is to rework our supply chain, and we're currently working with all our partners and to identify the kind of changes that they will carry out. And what we want to do is to create a robust supply chain network which is leveraging the cost model and ensure a better availability at our stores, which I think ultimately will reduce the inventory levels that we hold, and at the same point in time will help us achieve a higher like-for-like sales growth.
Right. So are the overall industry dynamics right now, Rakesh, stable now that the regulatory headwinds are behind? More importantly, is your business model stable, or is there some more restructuring that we can hear about in the pipeline?
Not really. I think today at the group level we have a well-defined fashion and lifestyle business in Future Lifestyle Fashion. The food, home and value fashion business is parked in Future Retail Limited, and with Hometown now becoming an independent company, which is a very different concept otherwise. I would say that all the structuring that had to be done to make these business units run independently, that has been achieved. And I think there is a lot more focus today on two parameters that we want to really work on. One is to ensure that we leverage our current investments, which can happen easily with a better like-for-like sales growth, and at the same time really look at all the KPIs which will ensure the fact that our return on capital employed keeps increasing over the next few years.
Right. What's the level of same-store sales growth that one can expect, Mr. Biyani? Also, could you update us on the profitability per square feet that you are expecting from the business?
I think the reason that we've been able to maintain our same-store sales growth is because there's been a lot of focus in terms of looking at store by store, what is the assortment that we have. We've been focused on ensuring that the availability improves. We've redone up a lot of our stores. The Gen Next has provided us a lot of learning, and the changes that we've carried out has made our concept more attractive to many more consumers, and the increase in footfall is helping us also deliver the highest like-for-like sales growth. We're working towards ensuring that these are the numbers that we can deliver at least for another 6 to 8 quarters, and parallelly there's work happening which says how do we sustain it for even longer period of time. Retail is largely a fixed cost business model, and with a higher leveraging of our existing sort of cost base with a higher same store sales growth, I'm sure the profitability will see even a better increase and that should ultimately lead to a return on capital employed. But I would say if in the next 2 years or so we are able to leverage our supply chain network with the GST benefits in place, I think the future is both in terms of sales as well as profitability should be even stronger.
Sure. Mr. Biyani, talk to us about the volume trend you've been seeing at Big Bazaar stores and also your product mix. Are we likely to see a change there?
I think the like-for-like sales growth has been achieved along with the fact that there's been almost about 9 or about 11% of volume growth that has also happened together with it. And I think our focus is really in terms of through the art of building efficiency in the entire supply chain as to what can we do to bring down the prices further, which means that ultimately we will start selling more volume. I think both these are focus for us. It's just not about just increasing sales, but actually being able to put more products into the basket. That is a larger focus that is continuing to be there in the organization.
Right. So also give us an understanding of what really are the expansion strategies going forward going to be like, and what are the formats that you're currently looking at?
Our thinking on the small store businesses, the traffic in the cities is becoming very chaotic. The travel time has increased dramatically. We believe the fact that consumers may not find it as convenient to travel longer distance to come and shop at bigger stores all through the week. There has to be stores which are more closer to customers' homes so that they can do midweek shopping there, and that is the whole idea of really building the easy day supermarket chain. And that's a work in progress. We are trying to build a digitally connected supermarket chain in Easy Day. There's a lot of work which will happen on it. We believe the potential exists to open up to about 4,000 odd plus stores on this kind of a format. But the rollout will happen on a progressive basis. I think there is a lot of work which is currently going on to understand consumers and to connect with them on a digital platform. So that the entire shopping can be personalized within these supermarkets.
Right. Rakesh, just hang in there. I'm just going to mark this very important listing and come right back with you. Lots more to chat about. But Capacide Infra, that should be listing just about any second now. The pre-open rates are already indicating a stock premium, and we're just gearing up to the listing ceremony. Not future retail, we should stay with the Capacide pre-open rates right now. It's indicating a very, very smart start, and we're just waiting for the gong to go and the first rates to really come in. And there you can, I guess, see all the family members just about getting it. Okay, that's the listing, and that should be the listing of the day. In all likelihood, it should be a very smart one and should list at a premium, and a sizable premium at that. There you go. A 52.5% premium is what the Capacide Infra Projects has listed at. So very smart listing. There was expectation of nothing less. It was going to be a very strong one given the kind of hefty demand that this IPO also saw, and the oversubscription numbers. A good 49% solid premium is what Capacide has listed at, and this in a weak market environment right now. But Rakesh, just getting back to you, the inorganic growth, that's also something that you're considering right now. Is that so? And after taking over several brands in the past, is it true that you're looking at Hypercity next?
I can't comment on any specific transaction. Such comments can only be possible once the board of the company approves any such possibility. But I can say that in our past experience is like that, the supermarket or hypermarket business is about scale, and where if you are able to build a right scale model around it, you can make a profitable business. And in our past acquisition and partnership with Bharti Retail, or that matter now the recent one with Heritage, we find that the merger together has created a lot more value for all stakeholders. And I would say as and when many such potential acquisitions come up, our board would definitely review the same, and if there is somewhere where we can unlock more value through the merger, that will definitely be considered by us.
Now, lastly, Future Retail has also filed for an IPO. When do you think that's likely to happen?
The supply chain, we have already filed our red herring prospectus with SEBI. We are awaiting their feedback on it, and if everything goes as per schedule according to our merchant bankers, we should be in the market sometime in the end of November, early December. It's an offer for sale of shares, so the bulk of the funds are going back to the existing set of shareholders. The company itself is has adequate amount of cash flows as of today. With GST, supply chain is a very promising business model which is emerging. FSC has over the years built a lot of experience in managing the Future Group's supply chain and the other companies. And I think it looks like a very, very promising company.
Right. Ms. Biyani, also gives a sense, 1 lakh crores annually by 2020-2021 is the target the group has set for itself. Tell us, where do you see this incremental growth coming from? What's the sales outlook for this year? And how would you extrapolate that to making it to the mark?
I think about 5 years back, we set ourselves on 3 years back, we set ourselves on a target saying that we want to be a 100,000 crore company. We are doing all the things that are required for us to reach there. The big chunk of it is to come out of customer-centric retailing, in which is about really identifying these 1 crore odd customers who are going to be capable of shopping 1 lakh rupees across the group concepts. There's an entire data scientist team which is currently working. There's a lot of new solutions that the company has implemented, which is allowing us to really study these consumers, ensure the fact that the assortments are adjusted to the stores where they are coming and shopping. We look quite confident in the fact that the target that we set for ourselves in 2021, we should be very close to that number.
Rakesh, great speaking with you. Thank you so much for taking the time out. And this is really one of those Rise with India moments, future retail. Thanks for giving us perspective where the business is headed from here.